Welcome back to the channel. Welcome back to another weekly price action review. So this shouldn't be a long one, and I say that every weekend, but it shouldn't in terms of how price ultimately responded. But there was some nuance to price this week, which was interesting, and also would have created at times a bit of a dilemma in terms of which way do you go. But we're going to evaluate that. We're going to get through into that now. So we're going to start at the on the monthly time frame. We saw the market purge this old low, trade into this bullish fair value gap monthly, and reject. Now, obviously, prior to this candle looking like this, it didn't look like that. So we're ultimately going to go down to the weekly time frame. But we can see how this rejection is taking place here, which is signifying that potentially, if we're rejected from here, from below this low, higher prices and these relative equal highs could well be the target. So anyway, we had this week here close below this old low monthly. So following last week's price action, where the market had traded through and closed below this old low monthly, I was anticipating a continuation of lower prices. Like obviously initially we're looking at this bullish fair value gap monthly, which as downside objectives closing below this low, we're naturally going to look at this. And in my opinion, this is where we would essentially see the first sign of resistance. Now, we could quite easily trade to and through, but I went with the view that this could present a roadblock for price, and because of that, it was something to it was something to bear in mind. So I was looking at this level here as a means that we could, as I say, we could see some resistance back into at some point of this weekly candle, and see potentially this short-term retracement. So the market obviously opened and immediately repriced lower. Now we can see it gap down because of where the weekly open is, and it ultimately repriced lower into this bullish fair value gap monthly, but it failed to trade lower to this old low monthly. In fact, we can see how the market began to reject. So I had noted this rejection here at this resistance level before the market began to reprice higher. Now, I'll note something when we get down to regarding this low when we get to the daily time frame. But I was monitoring premium premium PDAs relative to the weekly time frame to determine whether fair value would be offered. Sorry, not to the weekly time frame, to the daily time frame inside of this candle here, to see if fair value would be offered, or whether the market would be seeking liquidity higher. In that case, this old high weekly. So that's kind of how I'm viewing this near-term retracement. Okay, and what we can see is that the market traded into a premium of this range from this swing high lower. Now you could ultimately take this swing high here, obviously purge this high, so you could take that if you wanted to as the sort of the parent impulse price leg. But ultimately this swing point here from this imbalance, so we know that this is where reaccumulation of shorts formed. So I'm taking this swing point here as a significant swing point to the low, and we can see that the market traded up into a premium of that order flow leg before finding some form of resistance and repricing back into this weekly range. Hence why we can see this wick at the highs. Okay, so let's drop down to the daily and see See what we see. Oh, sorry. There we go. Okay. So as I detailed on the weekly time frame commentary, my anticipation was to see lower prices with an initial, with the market initially targeting that old low monthly. However, I noted how this bullish fair value gap monthly would be the near term drawn liquidity, and ultimately wanting to see how price reacted here. So as I said, the market opened, so we can see the weekly open price here. Market open and immediately reprices down into the bullish fair value gap before rejecting back into its daily range here, and ultimately trading higher and then coming back into the range for a bullish indecision candle close. But ultimately we've seen this rejection here, and at the close of this candle we have the confirmation of this fair value gap. Okay. Now, what was interesting to me regarding this low was the fact that we had symmetrical lows with ES and NQ, and that in itself, I mean, symmetrical lows to me indicates a low that is likely to be purged. However, because there was no high time frame cracking correlation here, I was not necessarily fine in terms of the retracement, but I wasn't convinced regarding the low, the strength of that low. So following this bullish close, this set the stage for potential higher prices to fair value in the form of this this first presented aligned fair value gap. Okay, and the market traded up into it, and I note the higher time frame cracking correlation here inside of this daily fair value gap after taking out the previous daily high. We'll see more of that on the H4 time frame, but it set the stage for lower prices. The market confirmed the lower prices with low time frame confluences in here and confirmations before repricing lower, but it failed to purge this low. So that's telling me that this, if we don't see a continuation lower here, and also we've seen a rejection back into the range, this potentially is a weak high. Now it's not a swing high, or certainly not relative to this time frame, but this high would well be weak because it failed to take out the previous daily low. Excuse me, it just feels like I've got something in my eye. Okay. So then when we head into Wednesday, we see how the market purges this low. And again, we'll see to some extent on the H4 time frame. So the market purged the previous daily low, but again failed to purge this old low daily here before aggressively repricing higher. And ultimately this created a record day, or one of the highest recorded days for indices. And ultimately trade higher, purges this previous daily high, and trades to and through this first presented aligned bearish daily fair value gap and into the upper aligned bearish daily fair value gap, where I note this PDA SMT within this POI. Okay, so we've seen this low get taken, this low failed, so this high we know is weak, trades through the high, through this bearish fair value gap and into here, and then we see this cracking correlation with NQ. Now, just touching on this we'll touch on this when we go to the H4 time frame, but this is a high probability cracking correlation. So the market then reacted here and obviously rejected lower into a discount of this range from this low to this high. So just for reference, so people know I'm pointing to, so from that low to that high, so that there, that range, find equilibrium, market trades back down into it. Okay, but more specifically, we would see a lower time frame POI in here before finding support, where we see this small rally to close the week. So for me, it's important to note that despite the market not offering fair value in this first presented aligned bearish fair value gap, my bias had not switched bearish at this point. Now, to some extent, it could have done, because we know that some form of reaccumulation took place here and we failed to take out this low. So we could argue and say, well, you know, because we know that reaccumulation took place here, we are bullish. That is fair enough, and that, you know, I'd be happy to concede that. But if we want additional confirmation, so for me, like I said, it wouldn't prevent me from taking longs, just because I'm not looking at the market from a bullish context, until the market has traded through ultimately this swing high. Now, this wouldn't be a swing high when we were on Friday, but we know that SMT formed here. We know accumulation of shorts took place here. So if the market trades through here and that high, on a closing basis, that would confirm a sentiment shift and a bias shift relative to this time frame, supporting, in my opinion, the idea of higher prices to the previous weekly high and the old high weekly. Okay, so as I said, this didn't necessarily constitute a bias switch for me yet. Trading to and through this one, and specifically this high on a closing basis, yes, it would. Okay, but again, on Friday we didn't have this high, and you know, there are an element of takeaways that we can point to in relation to this, and actually seeing a level of engineered liquidity forming. So when the market doesn't offer fair value immediately, so here is where, if we were going to see lower prices, this would, you know, following this cracking correlation here, this is where I would have been anticipating lower prices. But it didn't offer fair value. We traded to and through, so therefore the market is going to seek opposing liquidity. Well, opposing liquidity ultimately is at this previous weekly high. Okay. However, if it runs into a higher, in this case a higher bearish fair value gap, which has formed inside of a premium market, this is where the market could consolidate and engineer the buy side liquidity for the market to then to purge that high and then trade lower, with leaving this high intact. That's a possibility. I'm not saying that it will do that. I'm just saying that where fair value is not offered, if this fair value gap, let's just get the tool. If this fair value gap was not there, then I would be anticipating the market trading straight up to this liquidity pool. Okay. However, because this fair value gap is here, this is where the market could see some resistance. I'm not saying it's going to be all of that, but then ultimately we then get a purge of this high, and then the market could potentially trade lower. Again, I'm not saying that that's what the market's going to do. I am making the point and the case that because in this impulse price leg, we have an upper fair value gap inside of a premium range of the market, and because we failed to offer fair value at the first presented aligned fair value gap, the market is likely to seek liquidity, opposing liquidity above the marketplace. And because we've got this fair value gap here, we could see a level of consolidation. And if we do see a level of consolidation, what is consolidation? It is the process of engineering liquidity. So therefore, we've now created this old high. So we could see the market trade above this old high, engage liquidity, and trade lower. Or alternatively, the market trades above you on a closing basis and it targets these highs here for that opposing liquidity. Okay? So something just to note there. So let's drop down to the 4 hour. So a little bit more going here, a little bit more lipstick, but let's get into this. Okay, so Monday here, as I said, we know that the market opened and confirmed the weekly opening price. Okay. Before repricing, so market opens, confirms weekly opening price, reprices lower into the bullish fair value gap before rejecting from here and repricing higher, in fact displacing higher, where we ultimately create this Monday high. Okay. Then the market trades lower, whereby we confirm the true week open before we see this level of consolidation just in here. I'm just going to get the tool. So we're seeing this level of consolidation in here. Okay, so we've created the high, we're above the true week open. Okay, but ultimately we are consolidating but trending higher. Okay, before the market then continues higher, it purges the Monday high and setting a high time frame cracking correlation between Monday and Tuesday with NQ within this daily bearish fair value gap, and setting the stage for a high probability trade idea for shorts. This is high probability in here. So we've got purge of the previous daily high inside of a bearish daily fair value gap at the first presented aligned bearish daily fair value gap with a cracking correlation with NQ. Okay, as we see, bodies of the candles did not purge previous daily high. So this was mine and the high probability trade on indices this week. Okay, so the market then displaces lower and it trades down into a discount of the near term DR. So this high, this low, market trades down into a discount. Okay, but as we noted, failed to take out this low, this key low here. The market then formed this symmetrical low. So here we've got symmetrical lows on ES, NQ and YM, which, as I've mentioned before, relative equal lows here I believe will be a draw liquidity at a certain point in time. I don't know when. It could be near term, it could be longer term, but I believe that these lows will generate and engineer liquidity below here, and they will be the drawn liquidity in due time. So the market then displaces higher following the announcement on tariffs to set the record there on S&P, essentially the indices. Okay, and we purge the previous daily high Tuesday, right there, before continuing higher to and through this first presented aligned bearish daily fair value gap, and ultimately trading up into a premium, as we can see, of the parent range and into this upper bearish daily fair value gap. Aligned, again, aligned fair value gap is important. Okay, before we then see this rejection back into this range, and we trade. Ultimately, the market reprices lower, trades lower into this bullish H4 fair value gap. So we're now into this bullish fair value gap. We are respecting CE, terrible line, but you know what I mean. We're respecting CE, so indicating a level of bullishness. We have symmetrical price action at the lows, but we also rejected from this daily fair value gap. So there is an element of what we could consider as trap liquidity. However, I like to view trap liquidity between two imbalances of the same time frame. It's what I prefer to do. Because if you take an imbalance of differing high time frames, you could make the case and the argument that the higher time frame imbalance has far more weighting than the lower one. Okay, so ultimately the market reprices down into this bullish H4 fair value gap. However, it did not offer fair value in this first presented aligned fair value gap up here, which again is important. So this is where we would have expected the market to trade down and then trade higher if the market was showing signs of strength. Okay, not saying it still can't go higher. I'm not saying that at all. I'm making the case that this is where we would have expected to see at this imbalance the resumption of bullish order flow relative to the H4 time frame if the market was strong. However, because it didn't, it indicated that the market is likely seeking sell-side liquidity. So then then we see this consolidation here, symmetrical lows, and the market ultimately reprices higher, purges this H4 liquidity pool. I was looking at that for a potential short, didn't offer that. We had a symmetrical purge. But what are we seeing here? Potentially engineered liquidity again. Okay. And so the market consolidated, repriced higher above this H4 liquidity pool to close the end of the week. And that's pretty much price action. Now, if we jump down, I haven't really done anything relative to the hourly, but if we sort of look in here, we had purge of H1 liquidity pool, so that would have been one of my low time frame confluences to support this trade idea here. We've obviously got a inversion fair value gap here, which again you could utilize to confirm, but ultimately we've got the change in state and delivery on this candle here that we can see we trade close below, and various other lower time frame confluences in here. So the market ultimately forms that and trades lower, and then as far as I'm concerned, we see symmetrical price action pretty much all the way through. This didn't present an opportunity for me to get involved in the shorts, so I stayed on the sidelines. This was the trade of the week, and that is pretty much all she wrote for price action this week. So again, as I always mention, make sure you note down, you take a step back, note down your key takeaways. It's massively important. That's where you're going to leverage most of your understanding, your learning and development. So make sure you note those things down. You identify areas of where you were weak, where you were strong, and how you're going to approach next week based on the findings that you've had from this week and the previous weeks before. It's all about compounding these small 1% tweaks. So hopefully you enjoyed my analysis on this one. It was an interesting week. We now head into a new one. Look forward to that. We get focused again, making sure that we get all of our evening and daily and intraday processes and routines all in check, and we attack and focus the markets as we're treating this as a business. So hopefully you enjoy this. Hopefully you've taken something away. And guys, as always, I will catch you in the next one.